All right, guys. A lot of stuff going on today. We have a bunch of stuff happening here, specifically with news. Bitcoin this morning hit highs of 91,000, almost 91K. So Bitcoin hit almost 91,000 this morning. We had Home Depot, we had Shopify earnings also come out today. You can see Bitcoin right here. Bitcoin hit highs of almost 91K, got up to 90,725 a coin. 90,725 a coin. Shopify on earnings is ripping up this morning as well. Shopify ended up posting let me turn that music off. Yeah, so Shopify ended up posting for their earnings report. They posted Q3 sales came in at 216 versus 211 estimates. They also posted Q4 guidance revenue. We'll put this up on screen, but they posted Q4 guidance. We get some music playing here. Are you optimistic regarding today, guys? Bitcoin up to almost high. Again, they saw Shopify sees Q4 2024 revenue growth mid to high 20% rate on year over year. Some gross profit dollar growth. Yeah, Q3 sales came in at 216 billion. What did their EPS show up as? Does anybody know what Shopify's EPS showed up as? I mean, Shopify's up big right now. They're up to 102.80s. So they're up pretty big, but why? Am I cutting out? Am I good? Let me know. Let me know if my sound is good. It should be pretty good. It's weird. Like I see Shopify, but I don't see what they showed up as. Okay, I'm good now. All right, good. Yeah, I'm gonna have to look at Twitter. I don't see what Shopify showed. If you ever want to know what something shows up as, Twitter's actually really good. You put a money sign in front of it. Yeah, so Shopify. Does anybody see the EPS for Shopify? They didn't specify their earnings per share. Does anybody else find that strange? Does anybody find that strange? I mean, here's their revenue right here for Shopify. And again, Shopify's up big. They didn't specify their EPS. I think that's odd. But is Shopify looking great this morning? We also had Home Depot earnings release about 20 minutes ago. Home Depot is now up also. I don't see much movement here. Mosaic posted earnings. Home Depot posted. And I got a fly. Shoe fly, get away from me. Home Depot posted $367 EPS. Let me see what they were expecting here. Yeah, they expected 364. All right, so Home Depot posted 367 or 378 adjusted US. 378 EPS versus 364 expected. Revenue of 40.22 billion versus 39.23 billion expected. Mosaic also posted some other stuff. Yeah, it's weird that Shopify didn't post earnings per share, to be honest. Maybe I'm just missing something, but I don't see anything else either. I don't see any other. Yeah, so Shopify posted revenue of 2.16 billion, GMV of 69.7 billion, MMR of 175 million. They saw Q4 revenue growth at mid to high 20% rate. They said Q3, and this is all quoting them, Q3 was outstanding, further establishing them as a leader in powering commerce anywhere, anytime. Our unified commerce platform is becoming the go-to choice for merchants of all sizes, said Harley Finkelstein, president of Shopify. He said, quote, as the busiest shopping season of the year for our merchants approaches, they trust Shopify to provide the tools, unmatched speed, and reliability to maximize their success. Jeff Hassmeyer, CFO, said quote, Shopify achieved 26% revenue growth and 19% free cash flow margins this quarter, making our sixth consecutive quarter of greater than 25% revenue growth, excluding logistics. Moreover, we have grown free cash flow margin sequentially each quarter this year, consistent with what we delivered last year. These results demonstrate the durability of our business, our multiple avenues of growth, and continued discipline of balancing both future growth investments and operational leverage, end quote. Shopify's up. I mean, it's up. We'll see what happens here. Yeah, they really didn't specify EPS, which is odd. Oh, it's treating me good, Jay. Pretty good, bro. Pretty good, man. Yeah. Interesting. Bro, I was hoping we'd get less political stuff. My guy Money Mitch posted. My guy Mitch said this. He said, quote, here's some insight on history. The first red day following the 2016 election came on Monday, November 14th, which was the fifth trading day after the election. Today is the fifth trading day after the election. We'll get red action. I'll reshare this. My guy Mitch giving us the facts this morning. All right, I'm waking up, guys. Yeah. So one thing we see right now is we see a NASDAQ trend. You know, we're switching our strategies up. We're trading a very specific trading strategy from now on. And the trading strategy is going to be simple trend breaks. Simple trend breaks. All right. So that's what we're going to be trading. Simple trend breaks. Now, what we're going to look for, and I think we need to be a little bit more broad with what we trade. We got to trade the E-mini, the S&P, but we're going to be trading simple trend breaks. An example of a simple trend break is this, right? Like we got to look for which way the sentiment heads. An example of it, we're just going to be quick. There might be better examples of this. The thing I hate about, like, I wish, there we go. All right, so here's a trend, right? 1 minute chart. We get this break of the trend, right? One of the things that works really, really well that I'm looking for is once we get the trend break, we usually get a small period of time in which we can ride the direction of the trend. And so you get the break of the trend, that first pullback tends to work really well riding into a specific direction. That's what we're going to look at. We'll see if we can catch it. And aside from that, we got pretty choppy sideways neutral action. We didn't get a lot of good data. We got a bunch of sideways neutral activity here. So I don't know if we really have a trend right now. I guess we've got a little bit of one on the NASDAQ that I'm showing here. Maybe I got a better charting. When I zoom out on this, This little mini trend looks a little bit better. Let's see if we can figure this out. I gotta fix this. There we go. There we go. I think that's the little trend we got right now. It might not be perfect, but we'll wait for this trend to break, see if we get some better action once it does. We got a couple funded account program, or we got 3 funded accounts right now. 3. So I didn't know you could have up to 5 though, which is interesting. Yeah, Shopify earnings are out. Man, I got this soreness in my throat here. I'm hoping it's just from jiu-jitsu, to be honest. GameStop is the play today? Is it really? GameStop, huh? Honestly, GameStop kind of went crazy in pre-market. What went on with this? GameStop stock continues its rise, registering the longest winning streak in 4 months. Hey, nice Z. Beginner trading, is it better to invest low amounts of money to not miss out on price action, or to thoroughly learn technical analysis first? I mean, it's too vague, Phil. So it depends on how you're trading, brother. It really does. It's all relative to how you're trading. If you're investing, it's different. If you're short-term trading, it's different. If you're swing trading, it's different. It really just depends on how you're specifically trading. I think it's a good question, but it ultimately depends on what you're doing, how you're trading, all that stuff. Swing trading or long term? Yeah, so swing trading or long term. So just to put this up, swing trading or long term. I was telling my wife this, right? Because like I have, my wife basically has this like retirement account. It's a long story. And they're trying to figure out what to do with it. It doesn't have that much money in it, but they're trying to figure out what to do with it. And so she's kind of coming to me asking me questions, and she's got like, and she's, it's a long story, but somebody that helps run it, like one of her family members, is coming to her like wanting to basically trade it. And what I told her is this. I told her, look, if you're holding something long term, do not let anybody individually trade it. Like, you don't want to individually buy stocks in this retirement account. Like, to be honest, if you want anybody to do it, I should probably be doing it, but I don't want to do it. I told her I don't want to do it. It's not something that I would feel comfortable doing in general. But if you want to make money long term, the easiest way you do it is, number one, you buy and you never sell index funds. You buy index funds, you never sell. You're all like Warren Buffett famously challenged hedge funds and said, if you could outperform the S&P 500 over, I think it was like a decade period of time, he'll give them like $1 million, right? And all these hedge funds tried, and they all underperformed the S&P 500 over a decade. And so you could try to beat the S&P 500 buying individual stocks. Is probably not the move. The best move realistically is just a dollar cost average into index funds long term. And that's what I told my wife. I was like, look, you can try to buy individual companies, and that's cool. And sometimes, like, some people are actually going to do better buying individual companies. But the risk that you take is unnecessary. Like, you can dollar cost average into the S&P 500, the Dow, the Russell, not the Russell. Russell's not what you want to do. The S&P, the Dow, the NASDAQ, DCA into that long term. You're going to outperform most hedge funds. Just dollar cost averaging into index funds. You could also take an approach of like buying the NASDAQ, the Dow, the S&P 500, buying some gold, some silver, some crypto, right? And buying minimal amounts of each, but let it take over your whole portfolio, diversified, and you might do better, right? You might do worse. It just depends on the time frame. But if you're holding something long term, in theory, you should just never sell, and you should just hold that. The only time you should sell is if you're imminently retiring. Because when you invest in companies, you're in theory supposed to hold them forever. You can pass generational wealth on to your family, because over a long term, it's incredibly consistent. Those things are going to go up. Remember when you were saying the dollar index is doing just fine? Okay, let's take a look at the Dixie. Yeah, I mean, the dollar index is literally as middle range as you could get, right? Like, I get it. You're you're emotional. No offense, Marin, but I get it. You're emotional, brother. But the dollar index, when you put up a long-term chart, it's literally exactly in the middle range. It's literally right in the middle. Like, are we really going to act like this chart signifies it's the end of the world? You know, like, are we really going to pretend that? The dollar index is basically, again, the dollar index is one of those things where if it goes up a lot, people are like, it's the end of the world. If it goes down a lot, they're like, the dollar's crashing. It's the end of the world. Either way, they're just kind of manipulating people into freaking out. It's sensationalism to the fullest. Take a step back, understand what people are trying to do. Understand people are just trying to make you emotional. The dollar is pretty almost right in the middle. And when we talk about the longer term range, like, listen, if the dollar index was doing this, sure, maybe I would agree with you, bro. But the dollar index is right in the middle. I'm not sure what you're even trying to say here, because if the dollar index is certainly not crashing. And the dollar really is a situation where if it goes down, people panic. If it goes up, people panic. But it's about right in the middle, I guess, right where it should be. No? Oh, I'm sorry, Marin. If you're saying I'm right, I'm dumb. You're smart. Sorry, I'm defensive over here. My bad. If you were saying right, fine. Just look at the Dixie market to all-time highs. I assumed you were disagree with me because you said the yen, everything are effed at the end of it. So I assumed you would disagree with me. To 2022 high or 2020 highs. Yeah, actually, I don't think he was agreeing with me. John, why do you call everyone emotional when they say something that's against your perspective? I'm not saying he's emotional because it's against his perspective. I'm saying he's emotional because the Dixie is right in the middle of the range, right? Like, you see one of the most obvious ranges here. It's right in the middle. And so acting like it's the end of the world scenario, which I'm assuming that's what he was doing, seems like an emotional thing to me. It seems like an emotional thing. Most of the time, like, if somebody comes in my room and they tell me it's the end of the world, the stock market's about to crash, again, I think that's emotional. And time has shown that was just emotional, right? If people come in here and say the Dixie's, the Dixie shows it's the end of the world, but when I look at the Dixie, it's completely flat and kind of neutral. Yeah, it's up, but it's still it's in this range that it's been in. Like, it's done the same thing for the last 2 years straight, guys. This is literally the range of the last 2 years for the dollar. And so acting like we're in some super panic-driven spot, I just don't know. I don't think so. I think that's emotional. Maybe I'm wrong, though. Who knows? I could be wrong, certainly. Oh, sorry. Okay, all good, Marin. Yeah, like I said, man. Yeah. Morning, John. I think people I think most of the time, to be honest, Burge, it is emotion, and I think calling it out and showing people where they're being emotional is important. I'm emotional, top 3 most emotional people in the world right now. So I can't really judge people too much about it. But I guess in the end, like, if I run the stream regularly, I get people coming in here telling me it's the end of the freaking world. Like, anybody that's watched my stream for an extended period of time, y'all know how much people have come here telling me it's the end of the world. And what do I tell them every time? I tell them, you're being emotional. It's probably not. And why do I feel that way? I feel that way because I get so many different people coming in here telling me the market's about to crash and it's the end of the world, and it never does, right? And so what you learn very quickly is that people overestimate weakness. They overestimate weakness. Most of the time it's because like YouTubers are telling them it's the end of the world so that they can get clicks and views. And then when said YouTubers are wrong, they end up blaming it on manipulation, and it kind of puts them down this rabbit hole of like, oh, it's the end of the world. Usually, if you're betting markets are going to go down, long term, it's the worst bet you could ever make, because long term markets are going to go up. That's very clear. Anybody that understands like long term history of markets understands betting against it long term is dumb. It's just dumb. It's just not smart. It goes against the biggest statistical edge the market ever gives you. And so I guess in the end, I'm just tired of people over predicting crashes. I think they're really leading traders in the wrong way. They're causing traders to miss out on all these gains that they would make out on. Like, think about how many traders didn't hold the market over the last few years just because people were telling them the market's going to crash. The market's down 50% in 2 years. 50%, right? You invest 1,000, you got 2,000 now over the last 2 years. 50% increases. Imagine how many people missed out on that whole big run because they overestimated weakness. They overestimated crash probabilities. I'm sure it's pretty high, and I think they're probably the ones. I think they're probably the ones out here telling everybody the market's going to crash. I'm top 3 most emotional ever. And that everyone should buy SQ. I called him out and said I thought the SPY was topped at 585. He raged at me and called me the. Oh. Yeah. I think a lot of it really is confirmation bias. Like, I know a lot of people who are out here betting that the stock, like, the easiest way I could put it is like, you know how the easiest correlation, and I think this makes sense, right? The easiest correlation I can put to it is that, you know how preppers, like people who prep for the end of the world, right? Like they do all this prepping for the end of the world. They got all their canned foods and they got all this stuff going on and they're ready for it, right? At least at least a small amount, they kind of want it to happen, right? Because they don't want to do all this prepping and have nothing happen, and they're just kind of sitting on all this stuff and nothing happens. The world continues to thrive or whatever it is, right? To a certain point, they want something to happen to justify them making all this preparations. And so anytime you get some type of negative sensationalist stuff, anytime you get some negative bias, some negative market predictions, some downward pressure, the dollar is going to crash, like whatever you can really think of, they're jumping on that and being like, yep, see, the market's going to crash. And so it's confirmation bias in that way. Like they kind of want it to happen. The problem is that you miss out on the biggest statistical edge the market ever gives you. And the same thing happens with like crash predictors, where they've been betting the market's going to crash. They've flattened their positions out. They're not holding anything. And so any small bearish signal, any small news release that shows anything but a thriving bull market, they're jumping on it and they're being like, see, the market's going to crash, and I think that's what gets them. I think they just overestimate it. Anyways, see, we're holding the bottom of this trend line here. I don't really like Shopify, to be completely honest, Solo. I'm not a big Shopify investor. Shopify, the issue with it, and it's done pretty well, right? So what do I know? I've been definitely wrong with it. But I don't like Shopify because it's mostly driven by drop shippers. And I don't know if drop shipping is a sustainable business model. I think eventually it's just driving the prices up for everybody. And Shopify honestly had a big downfall in 2021 and 2022. Slowly reaching back up there. Now it's over 100, but it's up like 8 or 9% this morning. Yeah, I don't know what's a good idea there, Hunch. I really don't know, bro. I think either one of them's fine. Whatever you feel comfortable with. I'm not a big Shopify investor, so I'm not going to tell you yes or no. It's the end of the world. Time to watch a YouTube stream. Time to watch John from Beginner Trading, so he can tell me we're emotional. Johnny, you're a cream puff. All right, guys. So today's the last boring day in markets. And then after today, we get a lot of good stuff. Tomorrow, CPI inflation. Thursday, PPI inflation. Jerome Powell press conference. Friday, retail sales data. Next week, we got NVIDIA earnings, which is like the Super Bowl of stocks, the craziest time in markets, the craziest day in markets, potentially. We'll see what happens. No, I didn't take this bounce. I'm waiting, honestly. I'm being much more selective with my trades. Again, we got funded on another account yesterday. Another 2 accounts, actually. Yeah, honestly, crypto, Bitcoin ripping up. Bitcoin. Bitcoin almost up to lifetime high, or almost at lifetime highs still. New lifetime highs hit this morning at midnight at almost 91,000 for Bitcoin. Crazy. Crazy. Robinhood's the top downloaded app. Yeah. Yeah, we're going to be doing our day trading show now from now on. So we're going to be doing a pre-market show and then a day trading show from now on. Let me do a poll here. I didn't do a poll today. My bad. Here, chat. What's a good question for a poll? Give me some poll options. Yeah, y'all hit the like button, guys. We got 38 likes. Come on now. I'm not going to say y'all are lazy. But hit the like button or I'll hate you forever. Do it now. A lot of money from crypto will go in markets soon. NVIDIA earnings is going to be really key for the end of the year rally. 100%. NVIDIA earnings is the biggest thing. Here's a good question. I mean, I could do a Bitcoin one. If I was going to do a Bitcoin poll, it's not going to be where Bitcoin hit 92K. It would probably be, will Bitcoin break 100,000 this year? Free my grandma. What's up, bro? Hope you're doing good, man. I always remember that username. Like, I got a question. Free my grandma. Is your grandma locked up? Is she in jail? You know, like free Boosie, but free my grandma. You know, that's the context I hear it under. And then you got the police car next to it. So, what did your grandma do, bro? Wait to see how this week goes. Bitcoin. Yeah. How about will tomorrow's CPI come in higher or lower? Will tomorrow's CPI report show higher or lower inflation? Higher, lower. I don't know. /C results. Let me know how you feel. It gets real at bingo. Okay, I see. You know, honestly, bingo goes hard. You know, it goes down at bingo. You know, MicroStrategy. It's loving life too. I've hit 369.50s this morning, early this morning. Shopify still up big, almost up to 105. Say 105.40s this morning in pre-market. Yeah, Grandma got caught standing on business at bingo. She called A5. Somebody else tried to steal her spot. Not today, she said. NASDAQ, right at the previous closing price, completely flat on the day, completely flat. The previous closing price on the NQ is right at 21,210. That's exactly where we're at now. Yeah, Dogecoin ripping up. Honestly, my jiu-jitsu instructor, he's been talking about Doge a lot. Apple slightly green on the day at 224.40s for Apple. Apple moving up. Do you guys think now they start releasing numbers for the reports instead of the massaged ones that end up? I don't know. I think they're all real numbers, you know. I think it's easy to have a conspiracy theory. Again, nobody screams manipulation more than somebody that's wrong about a prediction. You know, and the problem, I think, is people trying to predict what CPI is going to be in the first place. Coming from somebody that's gotten 5 out of the last 6 CPI reports exactly right, CPI is not predictable. It's really not. I can use balance to try to predict it, but who freaking knows what's going to happen? Tesla's going to finally pull back. Where's Tesla at now? Tesla had almost 350s here, though. Hit 363s this morning. Granny don't play about her chips. I get it. Doge just lame. I'm up 19x on Solana. Hey, congrats, man. That's great. Good job. That's good. All right. What do you think about Tesla getting close to $400? I don't know. I think the Tesla highs are right around, where is it? 414s. So $400 is probably a pretty legit, like if you look at the chart, resistance level. But I don't know. I think it's still a long way to go. I think baby steps. I think it's probably healthy for it to kind of slow and steady move up, and as opposed to just a huge rip up that it historically doesn't really hold very well when it makes those big moves up. NASDAQ just went slightly green on the day. Slightly green. Slight upward trending bull market is what I see here. You know, I want to look at a long-term chart, try to get some type of bias here. And really, I think we have upward action for sure, but like an upward looking trend for sure here. November's been a very, very strong month. Boil it down to a 5-minute chart. See if we let me fix this trend. We might have a better trend here. Yeah. How do I get better at not going all in and out of stocks? I seem to get in at a great position and then find it very difficult to want to add to a position 30 to 50% above my initial entry. So what are you trying to do, Justin? You're trying to add to winners? Hey, what's up, Jan? Tesla dipped to 3:30 p.m. foreshadowing. Maybe it's foreshadowing. Maybe it's just balance. The Tesla drop this morning was scary. Yeah, it's a big dip. I'm wondering why that happened. Let's see if there's some news. Do y'all know what the news was? Tyson Foods put out something here. Yes, you're trying to add to winning positions. Well, I mean, adding to winning positions is one of the best edges you can have in markets. Typically, the way I do it is I'll add to a winning position, but only when the momentum's high. Like if we get a lot of upward momentum, I'll double down after I'm already a significant amount in the green. But the key is you got to hold it break even afterwards, and you got to be okay with it going to break even, because in theory, like adding to a winning position, it might be extended short term, and so I think the best time to add to a winning position is after pullbacks like if it goes up and then pulls back, add to it, and then see if it'll go back up, right? If you add to it when it's just breaking too much highs, it's going to be risky. I'm looking for the news this morning on Tesla. Why did it fall so fast? Dow settles above 44,000 for the first time. Could it be Bitcoin's run? I'm not sure. Tesla invested 1.5 billion in Bitcoin. Yeah, again, I'm not investment advice. I have no idea what I'm talking about, Justin. I'm not an investment professional. I'm not liable if you lose. You always got to make your own assessment, trade responsibly. The way I'll typically do it is like, it depends on the trade, right? It depends on the trade. I'm never adding more than 100% to my position, right? So it's not like, so if I have one contract at the NASDAQ and we go up a lot in my favor, I'm never going to add 3 contracts to the NASDAQ, you know, and triple my size. It's always going to be the same. I'm always going to double my size as opposed to anything else, just to keep my risk, just to be more risk averse. I don't want to take crazy risks. And so I would just, adding to a winning position is really good. It's just about having the patience to, another thing you could do is you could take micro contracts and then, you know, double your size with micro contracts, because it allows you to kind of ease into it more. I'm going to buy into this right now. Micro contracts on my funded account. It's middle range, but I think we also might pop up and test some highs up here. I think we might move back up to test the top of this range, but who knows? I'll take up to 4 contracts of this. So we have 4 contracts. More for long-term investments, such as building up my Roth. Oh, well, you just want to, with long-term investments, Justin, personally, it's about DCAing, right? DCAing is the way. Yeah, you know, because I told my wife this, right? I was like, my wife was basically talking about this retirement account that like she has some family members that want to help her manage it. And what I told her is the same thing, which is that we're going to add one more to this position, one more. What I told her was that, like, you can manage it. Okay. I'm going to go through a rant really quickly. But yeah, this thing just turned on me completely. I want to be patient though and give it time. You know, one thing this does do is confirm a trend, and luckily we're in micro contracts here. All right, so we're going to unload a lot of this here just to limit our risk, take a little bit of losses, but take smaller size on that retracement. And it looks like that was the good move. We'll be able to hold it a little bit longer. Anyways. Yeah, the NASDAQ's rejecting pretty fast here, man, off of the previous closing price. It like dumped. Still following that downward trend though. Anyways, let me go back to my rant here. Okay. Long term, the reason a lot of people do not maximize their profits long term, right? The reason a lot of people do not maximize their profits long term is simply because they do not have the discipline to leave the account alone. All right. And so what I mean by that is, like, long-term results investing in indexes or indices or blue chip stocks or whatever you want to look at, long-term results investing into those things are incredibly consistent. Like, you're usually going to earn around 10% on average a year investing into indices, like S&P, NASDAQ, Dow, whatever you want to use. You're usually going to earn. There we go. So we're back to flat here. I'm going to take another one of this off. I'm being really risk averse. I realize there's a 5-minute chart, and so it's a bigger range than I realized to take 5 contracts with. And we bounced right at the 200 EMA, kind of confirming that trend. But anyways, long-term results are incredibly consistent. And what I mean long-term, I mean like decades. So if you're holding something for a decade plus, you're pretty safe, right? Like, you're pretty safe. Are you perfectly safe? No, but you're pretty safe. And so the best thing to do is just dollar cost average into it. The mistake most people make in which they don't maximize their returns investing into these things is for a very specific reason, and it's because they do not have the discipline to leave it alone. Right? Like they end up having a big good year where they're up big in something, and they end up getting emotional, getting scared of losing it, and then taking the positions off, like selling. They end up getting emotional in good years and excited, and they sell their positions. Where like one good year is great. An example is the last 2 years, right? The last 2 years, the S&P, the Nasdaq are all up about 50% in 2 years. And so a lot of people right now, I'm sure, are getting emotional and they want to take profits and all that good stuff. And all that's good and fine. But if you DCA into index funds long term over decades, you're going to make thousands of percent versus like a 50% gain year to year. And so the way you really build generational wealth is just never touching it. You leave it there. I'm not telling you what to do. I'm not an investment professional. I'm not liable if you lose. I have no freaking idea what I'm talking about. But the way you really build generational wealth, like big returns, is you park your money there and you either add to it or you don't touch it. So you dollar cost average, which means like an example of a DCA strategy would be like I add 10 shares of the S&P every month, regardless of price. Whether it's up, I add 10 shares. Whether it's down, I add 10 shares. And if you park that and let it sit, that'll grow a really nice retirement account for most people. Again, I can't guarantee anything for sure. Nothing's 100%, but that's generally the best way to do it. I'm probably going to cut this. We're kind of confirming that downward trend. And I get worried here that we're going to start breaking down more and more. So we actually didn't end up losing too much here. We might have lost like $35. Could have been worse. But yeah. I'm top 3 biggest paper-handed traders in the world right now. But no, that's the biggest mistake most people make, is that they are unable to sit on the position long enough that they need to really maximize the returns. They end up getting emotional, getting excited, having a good year, wanting to take profit and lock it in. And that's great and all. But if you're holding something long-term, like I could do a compounding formula to show you, right? So even if you don't DCA into it, even if you don't add to it, right? Like let's say you got 50,000 parked in the S&P and you make 10% a year, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. In 20 years, that 50K is going to turn into $336,000 in 20 years, And so small returns are great. If you're up 25, 30%, that's great and all, but you're going to miss out on these type of returns long term. And so you got to be able to park your money there and let it sit. Now, what most people do is they do this. They park their money and they let it sit, and then they have like a short-term account where you can like swing trade or whatever you want to do there. And that's fine too. It's subjective. It depends on the person, but you just want to make the reason money managers are useful. And this is exactly what I told my wife. The reason money managers are useful, even though they're going to take more fees, is because they're going to be able to park your money there and not touch it. If you find a good one. Some of them are just going to take a bunch of short-term trades to run up their own fees, and they're sketchy and unethical. So you got to find the right one. But the reason a lot of people want money managers as opposed to managing it themselves is because if they manage it themselves, they're going to get emotional and take profit and miss out on the bigger returns from long-term investing. And so that's what it is. But you could have sold this year and rebought after SPY hit 450s, 500 next year. And that's true, right? But again, the easiest way to put this is that, so this guy said, but you could have sold this year and rebought after the SPY hit 450, 500 next year. That's true. You could have, right? But you know how many people were telling me that the market was going to fall 2 years ago? 2 years ago. 2 years ago, everybody was telling me the market's about to crash. People were telling me that the SPY was going to hit $300-$400 a few years ago, right? And so you might think the market's going to drop next year. And the reason this doesn't work is because crashes are constantly over predicted in markets. Like throughout we could have the strongest market in history. Somebody's predicting a market crash 2 weeks before it happened, or 2 weeks before the bull run. And so the point is, like, you might think the market's going to correct, and it might. I think honestly, statistically, it's likely that we're going to get a red year next year. Statistically, I think it's likely, and so, take that with a grain of salt. I have no freaking idea. I just think we're up so much balance. We might, correct a little bit. And so I do think we're starting to kind of ease towards, my bias is on the downside over the next year or two, just because we're up so much over the past few years. But the reality is, nobody freaking knows, right? Nobody knows, especially not me. And the issue is that people overpredict crashes. And so what ends up happening is people end up selling because they think we're going to have red years. And then next year, an example would be like, if I ended up selling because I thought next year was going to be red, and it might be, but let's say it's not, and next year ends up going up 30%, right? And then I see the market go up 30% and I didn't capitalize on it. So I miss out on that big run, and I get emotional and I try to buy in at the top, and then we get a correction back down, and then it ends up falling down more and I end up losing money. And that's why trying to manage it yourself is usually not the right move. You're either adding to it with DCA, or you're just not touching it at all. That's the way, in my opinion, but everybody's different. And this is not day trading. Like, day trading plan is going to be different than this. Like, a day trading plan is a completely different plan, if you're day trading. All right, guys, here, I got to switch. Right, like Jan said, you could, but it's nearly impossible to sell at the highest point and rebuy on the low. 100%, right? Everybody thinks they can time the market. Here, the famous quote. I'm going to put the famous quote in chat. Some of you guys might know the quote. Here's the famous quote. Time in the market beats timing the market. Right? Very famous quote. What does this mean? This means you can try to time the market and sell at highs and buy at lows. You're probably not going to be able to, right? Sitting in the market long enough is going to beat that all day. Again, Warren Buffett famously told all the big hedge funds that if they could beat the S&P 500 over a 10-year period, he would give them like $1 million. And all these hedge funds tried, and guess what? They all lost. None of them beat the S&P 500 over a decade period of time. And so what does that tell you? It tells you time in the market beats timing the market. Like, you can these hedge funds just want to. There's people wonder, then what's the point of a hedge fund, right? The point of a hedge fund is that there's tax advantages for it. Like, there's specific tax advantages for it that make it useful for a lot of big money. All right, so we're now at the bottom of this range. Yeah. I guess that's a good question here. Do you guys think, do we correct downward? Here. Do we correct to the downside in the market next year? That's what I want to know. Do you think we get a downward correction? All right, guys, so we're in this trend that we've drawn here. We're bouncing right at the bottom. Our little trend line actually worked pretty well. Personal strategy: a professional manages 97% of my money, and I keep a small Robinhood account so I can still trade with no emotion and for fun. Yeah, that's the right way. Like, an example would be like taking $300K and giving it to money managers, and then taking a $25,000 account and trying to short-term trade it, however you want to do that, right? Or try a funded account program like Top Step. Shameless plug coming up. But Top Step gives you a demo, and they test your skill with it. So this is Top Step X. This is a $50K funded account that I have. They give me a demo. They test my skill with the demo first. If I pass the test, they fund me $50K. If I fail, I only lose the monthly subscription. And so this creates a very powerful and unique scenario in which, your risk is limited. $49 a month is how much the base one costs on Top Step. If you pass the test, you get a $50K funded account with a 90% split, and they pay out millions. They've paid out over $100 million in the last few years. They've been around for over a decade. Honestly, and it creates this really unique situation where in the futures market, you can day trade the S&P, you can day trade the NASDAQ, you can day trade the Dow, the Russell, gold, some currencies. Patterns are super, super similar to blue chip stock patterns if you trade indices. And, there's no PDT rule. So you can day trade. If you pass it, you get a 90% split once you're funded. And so it's very similar to funding yourself. 90% split is pretty similar to the 100% you get funding yourself. But the risk that you take in this situation is noticeably less. $49 a month risk creates this really unique situation where you have some pressure. You have some risk. You're learning how to trade under pressure, which is all what trading is about. But instead of risking thousands of dollars and funding your own account, which is what most new traders end up doing, and then losing thousands and thousands of dollars, especially when you're new and you're learning, in this case, you only lose $49. It's a really unique situation. It's kind of like a souped up demo account. And if you were going to pay for real-time data in a demo account outside of this, it's going to cost about the same. And so the value's certainly there. But they're an affiliate of mine. I'm biased. Check them out if you want to help support the channel. There's the link. Appreciate the love. Top 3 plugs in the world right now. All right. Honestly, my trend worked pretty well here. I'm gonna put a 1-minute chart up. This trend actually worked really well. I gotta wait for the break of the trend. So again, what we're really targeting this morning is trend breaks. Who's Joe? My favorite saying is what goes up must come down. Yeah, but in stocks, that's certainly not true. In stocks, that's definitely not true. Again, the easiest way to prove that wrong in stocks is let's look at the S&P 500. This thing went up, still ain't come down yet. Here's the S&P right now. This thing went up. When's it coming down? That's certainly not true in stocks. That's a silly quote in the stock market too. What goes up must come down. Of course not. The S&P is going to go up about 10% a year on average. Not every year, but in general, it's going to go up 10%. So yeah, this thing has gone up. Where's the downward pressure? It has none. Yeah, where's gold? Gold? Yeah, gold's been on a pullback since we've had some stability and stuff. Bouncing back a little bit this morning, though. Yeah, what goes up must come down unless it's the S&P, the NASDAQ, the Dow, gold, NVIDIA. A lot of healthy blue chip stocks. Bro, so many people talking about freaking GameStop here. Man, what's going on with GameStop, chat? Goldman just said they're planning for the S&P to average 3% over the next 10 years. That sounds like a big pullback to me. Yeah, Goldman Sachs, let me tell you something about Goldman Sachs. Goldman Sachs also said that the SPY was going to crash. Let me show you guys. Goldman Sachs also said that the SPY was going to crash. Let me find it. Here. Goldman told everybody to prepare for a big bear market here. And so I'm not saying you shouldn't listen to Goldman, but investment banks are certainly wrong sometimes. They certainly have their own agendas and their own, their own reasons for saying stuff. But yeah. All right, chat. What else we got today? Yeah, we got futures. Now, here's GameStop. Let's take a look at GameStop here. There's GameStop. Again, we're waiting for this trend to break on the downside in the S&P here. Again, here's GameStop right now, man. Look at GameStop. GameStop has been on a run. Rumor has it that people are starting to get concerned about tariffs. Oh, yeah, for sure. We'll see if they actually affect anything. And the effect that we're going to get from tariffs is going to take a while anyway, right? Like, number one, he doesn't take presidency until for at least a couple months now. After he does that, if and when he implements the tariffs that he said he would, is a different timeline altogether. And then when they start to negatively impact us is a different thing too. So we got some time. It depends on how aggressive he is. But I think, like, okay, if you want us to build up our manufacturing here, you gotta, I don't know. The real question is manufacturing really a true gauge on is manufacturing really a true gauge in modern age of a country's strength? I don't necessarily think so. I think like defense, intelligence, like all that stuff's super high. How's Tesla looking? Tesla's up. Tesla's up. Again, GameStop, guys. Here's a long-term chart on GameStop. Here's a short-term chart. GameStop's up big. Yeah, I'm looking at our poll numbers here. He said, will tomorrow's CPI show higher or lower inflation? 53% say higher inflation. And remember, tomorrow's CPI is expected at 0.3% for core, 0.2% for regular, 0.2% for regular, 0.3% for core. 3.3% over the year. Again, Shopify up to 103s. We got Apple at 224s. Again, the NASDAQ's still following the same trend that we've had for a while now. It's obviously a bullish trend. When will it break this trend, though? We're going to look for a trend break on the downside or the upside. I mean, if we break all the way up here, we'll look for that as well. But we need a change of direction here first before we take any positions. I'm trying to trade slow. But the trend we drew honestly worked pretty well. Yeah, the problem with X, though, it's way too political. All right, we're waiting here, Chad, to get NASDAQ in this upward trend. GameStop, guys, up to 27s here. If we put up like a 20-day chart. Let's see, an hourly chart. Yeah, here's a 20-day chart on GameStop. So GameStop has been on a tear. Honestly, this thing has been making some moves. It's still got a ways to go, but hitting $30 could spark this big bull run. And again, GameStop earnings are going to be coming out pretty soon here too. I think they come out on the 10th. So they come out in like a month. Yeah, so GameStop earnings are in a month. They stopped doing earnings calls completely, which is interesting. And we'll see. See, part of me wants to short this on the NASDAQ, but I got to be disciplined and wait. I bought NVIDIA and Apple dips yesterday. Yeah, Apple bounced up. It depends on where you bought it, though. Apple dipped all the way to 221.50s. It's back up to 224s. Yeah, look at GameStop, though. Again, GameStop making moves. Will it hit $30 today, guys? Will GameStop hit $30? Yeah, I'm watching GameStop. Again, I wish GameStop would go back to doing earnings calls, though. Oh, man, sorry, Pawn. I'm just now seeing all your stuff. Yeah, a lot of people are saying trading smaller crypto coins. What's interesting, though, man, is AMC lost a lot of steam. You know, like my channel got big during those moments, right? During AMC, GameStop, and all that stuff. So that's where my channel really got big. And so, but when we tried to cover AMC earnings, nobody was there. It wasn't just in my channel, too. I looked around at everybody else covering AMC. Nobody cares about AMC anymore, which is really interesting because like AMC got big on the backs of GameStop, right? What happened was GameStop squeezed really big and people thought AMC could do the same. And AMC and GameStop were just different things. GameStop had a much smaller float, much more squeeze potential than GameStop or than AMC. GameStop did. So traders that came back from losing accounts, what changed the first time? All right, look at the NASDAQ going back up here. This is why like trend trading, basic trend trading is some of the better ways to trade, of course. Looking at my poll here. We got about 500 people. Hit that subscribe button if you haven't already. Bump the like number, guys. Let's see where our likes at, chat. We are at 104 likes. I think we could do a little bit better than that, though. Bought 500 shares of AMC to hold this morning, assuming some money will go into it. Yeah, I mean, AMC might go up with GameStop. So AMC and GameStop do have some sympathy movement, and AMC's up to 450s. It's not the worst price it could ever be. AMC did rip at the closing bell yesterday, too, so. I own 500 shares of GameStop at 25. Hey, good luck. Hope you make some money. NASDAQ pushing right back up here. Anybody trade NASDAQ? We trade the NASDAQ too. NVIDIA's green again. Yeah, NVIDIA had a lot of opening weakness yesterday. I think a lot of people want to see NVIDIA break 150s. And so I think that's the next step is does NVIDIA break 150s? I think longer term trend over the past like 2 weeks is green for NVIDIA. But I think NVIDIA also has been pulling back over the last 2 days straight. But if we look at NVIDIA this morning, NVIDIA's up some. So NVIDIA dragging everything up with it. So here's NVIDIA right here, a 1 hour chart. You can kind of see again 2 weeks ago, NVIDIA was back to 128s. It's been on a really nice upward trend over this, couple week period. But you know. It's been pulling back for the last few days for NVIDIA. And so I don't know what we're going to get there. Roaring Kitty posted more. Yeah. And so now NASDAQ's actually technically green as well here. So again, we're going to extend this to the left. Extend this to the left. Hey guys. Why are we hyping up GameStop? GameStop's up. I'm not really hyping it up. I'm just watching it. I hope it goes up. I want it to go up. All right, guys. Sorry, my family came in here hanging out. All right, so will GameStop hit $30 today? I don't know. NASDAQ's still in this really sideways trend. We're waiting for it to break out. Sitting tight. NASDAQ, slightly upward trend. NVIDIA's driving this, though. NVIDIA's been moving up. Again, there's GameStop at 26.50, so we're watching GameStop. See if GameStop makes a run at the opening bell today, too. Hit a 16-leg parlay for $8,000. Hey, good luck, bro. Yeah. And again, we're going to be doing like we always do, we're going to be doing a day trading show today, too. All right, right in the middle range here, man. I'm waiting for some good trends. I mean, we got this upward trend. I got to kind of wait for this trend to break, I think. All right, so sideways trend. GameStop's still trying to run, though. It's still trying. Bitcoin had a 3,000 pullback. Yeah, but Bitcoin hit almost 91,000 earlier this morning, so Bitcoin's gone crazy. All right, guys. All right, chat. So we're getting everything ready here. Yeah, so we're still right in the middle of the range. GameStop's still struggling to pick up some steam here. ADA Cardano pulled back almost 10K in one day. Yesterday was nuts. Yeah. Honestly. Well, the whole market dipped, and I think the dip was kind of expected, right? Like we had that big pullback, but everybody's kind of already expecting that big pullback. You know, Microsoft downgraded after a top crypto market. Even the rising channel is tech book bearish. I bet it rips up to 290 even better on the NASDAQ 100. Yeah, we're at 206 right now. I'm looking for either one. I just want to see this trend break on the downside. I think we get an obvious trend. And so, again, what I'm waiting for, what I've been waiting for all morning is I want to see a break underneath this, a pullback to it. We'll short the pullback to it and bounce. Or we got a couple strategies. Or a break over this side, we'll buy the dip and ride the bounce. Or if we get like a head and shoulders where we break above this and then we come back down, then I will, we get like a liquidity grab. So again, another thing is like, so if we like a fake high break is like a liquidity grab. So if we get like a liquidity grab up here, and then we move all the way back down under the trend, I'll take a longer term short trend looking for like a range like this to follow afterwards, if that makes sense. And we'll see, we'll look for the same thing on the downside too. But that's what we're looking for right now. I would prefer it to break on the downside and then us get like a correction in the trend. But either way, again, we got to be patient and wait for it. All right, so we're moving down. Again, I got to just be patient and wait for it. We can attack the trend, and I think the trend that we drew is really kind of confirmed from all this, right? Like, look, we'll fix it, tighten it up a little bit here, and then kind of zoom in, maybe fix this a little bit more too, although we do have that nice little consolidating trend here. Put it there, I guess. I guess that's fine. Yeah, so we got the top range pretty nice. We're just trying to find a coinciding bottom range trend. Bottom range trend kind of looks like that. All right. All right, so we're going to be scaling up our day trading size. We just kind of got to wait for it, though. Looking at our chats. All right. GameStop back to 23. I don't know. GameStop, I mean, $23 is right here. That's going to break under all the lows of the day. It really depends on what happens at the open. Yeah, it really just depends on what happens at the opening bell. We'll see. There's nothing bearish about consistent higher highs and lower lows. No, I agree. I'm not. That's why I'm not shorting it up here. But again, what I'm saying that I would be looking for is if I'm not trading right now, but if we come back down under this low, these lows right here, right, and we break underneath that trend, and then we move up like this, that's where I want to short, right? Like that's what I'm targeting a short. Why? Because we put in a lower high or a lower lows. We put a lower high, lower lows. And so that's what I'm targeting for a potential change of trend direction. It might not last long. Like this might last like this, where we downtrend for a little period of time and then we kind of come right back up and start doing something else, right? That's what we're looking for. But we got to be patient and wait for it. And we might not get that at all, right? Like we might not get that at all. If we break this high right here, where we move up and pull back and test this, we'll buy this and attack that. But it just depends. We'll have to wait and see. HD earnings are already out. We covered them early this morning. Yeah, eventually we're going to get a reversal, but we're getting some consolidated time frames here. So I'm going to put a 5-minute chart up, see if I can get a better trend. I think maybe just ignoring this little range there and looking at this here is probably the move. Yeah, look at that trend. That's a nice trend. Okay, that's what I need. I need to see the higher time frame. Yeah, really, I'm kind of waiting. Yeah, we're waiting. We'll see if we get something good. Also, we're going to put it in sub only mode. So if you haven't already, hit the subscribe button. We appreciate it. Now we are going to be on Top Step TV for Power Hour today. So we will be there later on today. All right, so we're testing the top of this range now. Watching the NASDAQ pretty closely here, pretty close. Looking at a 1-minute chart, but yeah, the E-mini's been harder to gauge. What is Tesla earnings? Tesla earnings were like a month ago. They were like really like 3 weeks ago. All right, so Tesla earnings were like 3 weeks ago. Yeah, let me put this up. I'm going to put myself on the top of this chart here because I think it's easier for you to see like the trends that I'm drawing on the top of this chart. I feel like the market will lose its uptrend. Maybe. We'll see. Yeah, so look at the high test here. So we're now testing the top of the range. We've had this really consistent range that we've seen multiple times now. Isn't there a parallel tool I should probably be using? Yeah, this is what I should be using here. Let me see. Ooh. Yeah, that's what I should be using. I think we can't help but see this here. Like, look. That's the parallel trend I see right now. Spies moved out of his bear flag. Yeah, maybe. I feel like this might break the top of the trend line too here. I think maybe putting that there. Okay. Oh, guys, all right. My throat hurts, dude. I don't know. They were teaching my son rear naked chokes. Ugh. I don't know if he caught me or what, but man. Every time I swallow. Tesla's looking all nervous. Let's see. Where's Tesla at? Let's take a look. So SPY is still slightly red here. Here's Tesla. Tesla at 340s. Right out 340s. Headed to the gym. We'll be listening in. Hey, thanks, Lolo. That'd be a good band name. What? If I were market maker, I'd be seeing a lot of stops below those lows, but I don't know. As retail, I see straight to the upside. Right. I mean, the reason. So, like, okay. So if we break below this here, right, and we test this, and let's say we break below it and then pull back to it, a lot of the time we're going to get a small downward trend in this direction, even if we continue back upward afterwards. Why? Because a lot of, like, when you're looking at people trading this trend, where do they set their stop loss? They set them right here, like right under the trend line. You know, so we break the trend, they get stopped out, it triggers some downward movement, and then we might get some upward movement or whatever. But that's in theory what we're trying to target. But Nasdaq's pretty flat. It's a slight upward trend. Hey, thank you, Ricky. I appreciate it, brother. Thank you, man. It's a slight upward trend, but it's not anything crazy. But I think the trend's obvious. At the very least, we got an obvious trend, and that's good. You know, that's good. Obvious trend's always good. People tend to forget how Tesla moves. Well, Tesla moves like this. Long-term, Tesla moves like this. Right? And so it's been like here. Right? Short-term, Tesla goes like kind of like that. Where it goes up big, down big, but generally moves up long-term. Where's Bitcoin? Bitcoin loving life right now. Scary ride. What's up, Rolly? All coins aren't loving life. I thought all coins were doing well this morning, right? Let me see where all coins are at. Yeah, so So there's a phishing scam according to Fake Zoom. Bro, these scams are catching people too, brother. Like I seen, again, we have a family friend who says her husband got with one of these scams. And honestly, they're really smart people. So I wonder what really happened. Again, basically what she said happened was this. She said that all the people at his work were doing this investment, right? And putting money into this investment. And like some of the people were promising other people that they were making these returns. And so what happens, let me like write this out. I think writing this out would be the easiest thing. What happens is this. Scammer convinces people they are legit. Let me fix my area here. Scammer convinces people they're legit. People deposit money into scammer. And this is basically what investments. This is what they do, right? Scammer convinces people they're legit. People deposit money into, wait, where'd it go? Hey, where'd the little thing go that lets me move this? No, stay chart. Okay. All right. I don't know how to do this anyway. All right. We'll keep doing this. People deposit money into scammers' investments. Scammer claims they are up big. And this is what happened. People deposit more. Eventually, people want to withdraw. Scammer tells them to pay more for taxes. They desperately do. Scammer vanishes. This is the step-by-step process. And this is what happened with them, right? Is that scammer convinces people that they are legit. Essentially, this guy had his work. This guy had a bunch of people at his work talking about this investment group that could make them 100% a month or whatever it is, right? And so he puts money into this investment group at work, and eventually the scammer claims that they are up big, right? Like this part happens here where, he's been depositing thousands of dollars. So what do they say? They say, oh, well, you're up 200%. Your 5K has turned into, whatever. Your 5K has turned into 15K. You're up 500%, 400%. And they get all excited. And then they say, well, do you want to deposit more? Sometimes they'll even have the investment manager flirt with them. They'll be like, oh, you're so cute. You want to take me out on a date with this money? And the people are like, yeah, guys, yeah. And so they deposit more money, trying to show off in front of the hot investment manager girl. And then they keep depositing more money. Eventually it gets to the point where they're like, yeah, your $5,000 has turned into 300K. That's a little bit outlandish. I would say your $5,000 has turned into 60K. But in order for it, so then they want to withdraw. They're like, all right, well, give me my 60K then. Then they hit them with, listen, we would give you your 60K, but we have to pay taxes on this. Like, you got to pay taxes, and we'll pay taxes for you and then immediately give you your money. You just got to send us, you got to send us your 30%, your 33%. You got to send us another 30K, or you got to send us another 20K. And then they desperately do. Then they start getting desperate because they start planning out what they're going to do with the money. They start saying, oh, I'm going to buy a boat with this. I'm going to buy a car with this. I'm going to buy all this stuff with this. And that's where they get got. They get super excited about it. People know how to manipulate people in this way. They got to pay taxes, and then they start depositing more money, and then they'll come up with a different story. They'll be like, oh, I would have, but this happened, and you got to pay this amount. Then people are so desperate to get the money, they start ignoring red flags. Confirmation bias kicks in, and then the scammer vanishes. Again, I had a friend's husband. Look at the NASDAQ push-up. So NASDAQ's testing the top of this range here, chat. So we're testing the top of the range, right where we talked about. Yeah, so we just broke highs here. So again, we broke highs. Not big enough high yet for me to want to get involved. I'm worried this is a liquidity grab, meaning a liquidity grab, what this would mean is like an example of a liquidity grab would be like we break highs, we pull back to it, everybody gets excited thinking we're going to break highs again, and then we start downtrending like this, right? Like this right here would be considered a liquidity grab. That's not what we want to get stuck in. Right. No, dude. Like, listen, in the end, nobody's going to come up to you at work claiming to have any type of good investment. And immediately, if somebody comes up to you, like, look, it doesn't matter how legit they say they are, right? What they'll do is they'll promise these crazy big returns. So they'll promise, like, hey, you invest. The easiest way is like, they'll be like, hey, I had a friend, he invested 10K and this guy made him 40K with it. And, I got it in my account, bro. It's legit, right? Like anytime you hear that runaway, nobody's going to make you 100%, let alone 400% returns on anything. Nobody's going to make you that, right? The best investment people in the world might make 30% on average, maybe. And that's definitely not every year. And so if somebody's promising you 100%, follow what big money does. Big money knows what earns them money. Again, big money knows. Okay, big money is not going to risk anything for that 200-300% gains on scammers. Why? Because they understand 100% is. If anybody claims to make you 100% a year, they are lying to you. And big money understands this incredibly well. They understand where people get them. New money, people that don't have big money like this, people that don't have that much experience, they don't understand why that's such a massive red flag. Somebody claiming to give you 100% a year. They just don't understand why that's not a sensible thing for somebody to offer. And so they end up falling for it hook, line, and sinker, thinking they're doing something good. And that's how they get got, is they end up thinking like, hook, line, and sinker. All right, I'm going to short this now. We're actually breaking into this. 2 contracts. We'll keep it very short and sweet. It's kind of a risky thing, and we're going to take small size. I wanted to buy this too, but it's all right. I need to actually, yeah. We'll trade a little bit closer to the opening, but I should have bought this instead. Let me switch this pattern here. Oh my gosh, we just added to it. I didn't want to do that. Top 3 worst trade managers in the world right here. I don't know if it broke it high enough for us to really get interested, but what I really honestly want to see here, I wanted to buy this. What I really wanted to see here, chat, is if this is a liquidity grab or not. Yeah, so again, I should have bought it like I wanted to, man. We're gonna have to cut it here. I wanted to buy this dip. Honestly, I planned this out the whole time, and I just got a little bit worse at executing it. Because remember, I told you guys if we broke the top of this trend line, I would buy the dip in the same trend direction, and I should have, honestly. But not the best at managing trades today. Where's my sad sound here? In the end, we're trading small, waiting for the opening bell to hit. So we might be trolling and sticking around, but would you practice your BJJ skills on scammers? Maybe. Now we come back onto this trend line, we are going to attack this. Because again, we're going to look for that same liquidity grab strategy, but yeah. All right. Oh my gosh, we just bought it. Hold on, I wanted to short it. Terrible trade. I'm going to add up to 6 contracts here. Specifically on a bounce, and we're going to take some larger risk. I am scaling up my size today, but we're trying to... There we go. We got 4 contracts here. We got 5 contracts. We'll add up to 6, like I said. What song is this? All right, so nice. We're going to cover a piece of this here, lock it in. All right, so we covered a piece of that, locked it in. I'm trying to get my soundboard up so we can add some sound here. All right, we're going to add some more on this bounce back. 6 contracts here, and we will take another piece of that off, lock a lot of that in. Kind of hurt our average some, but that's okay. 4 contracts left, and maybe we'll add some back if we bounce back up. I'm gonna take some off here. So we've already scaled out of most of this position, and honestly, that original fake out liquidity grab thesis we had on it, absolutely correct. Absolutely correct. And so it gives me some confidence in this trade strategy, and I want to cover some of this here now too. We might add some more into this now as well, because I think we're going to start to downtrend, but who knows? We'll wait. All right, we'll get out roughly flat on the rest here. I think this looks very much like a downward trend, but we're going to cover that. Pretty green trade. We'll take it. Hey, what's up, Kay? Thank you. Thanks for your great daily content. Hey, thanks so much. Trash day sound. There's a way I can like change my voice. I got to figure out how. Hold on. Yeah, I have to like figure it out. All right, I'm going to short into this now. We're going to start it small, and we're keeping it pretty small. We're going to do some heavier day trading with actual contracts after the opening bell. We're going to add to this. And we're going to take up to 6 positions. There's 6 contracts here. There we go. Nice. Take piece off. I had to change the music a little bit. There we go. All right, we're going to take some more off here. Lock some more out here. We'll hold the rest flat. Evergrande. It's just different stuff going on. I think the downward trend's pretty likely here, but we will cut this if it pushes up too much. We're already green on this trade, so it's not going to be the end of the world no matter what. But we're going to get out half and just lock it in. And now we're actually somewhat green because of the fill it just gave us right there. Yeah, we're green. Trying to use some risk management. I still think we're going to go to cut this and get out the trade green. So we made some money on that one too, despite that last exit. Yeah, I feel like it's going to come down here too. Like I think it's hard to tell, right? Like there's all variance, so it could go either way. But again, I think it makes sense. Break, liquidity grab, downward trend for a little bit, and then maybe it continues up trending here. And so that's why I attacked short. I lost some money on that initial trade, and my direction was correct too. So I have to work on managing these better, but I think the strategy is solid. Like I like trading extension, but I also think that these fake high breaks, liquidity grabs happen a lot, and then then we can bet on the trend. Do I have PowerPoint here? Yeah, we'll see. All right, so there's 8 o'clock here, chat. Again, we're going to be doing our day trading stream later. If you want to join our day trading stream, it's going to be going live too. Here's the wait list if you want to join it. Yeah, look, there's the breakdown. I think it'll break down too. I think it'll continue down. I think that makes sense. And again, I'm on Top Step right now. If you want to test some strategies with me, Top Step's genuinely the best way to do it. No PDT in futures. You can day trade short, buy market, sell market. Very similar to day trading stocks. You don't need 30 grand to do it actively either. These funded account programs like Top Step are allowed. Top Step's the most legit. They've been around for over a decade. Look, there's the downward pressure. So we were right about our direction. We're waiting a little bit closer to the opening bell for us to trade large. And again, we're going to be trading same strategies live at the opening bell. So stick around. We got our day trading stream if you want to join it. But there's the downward pressure. Again, 100% right with that move. But again, if you want to check out Top Step, they are a funded account program. They give you a demo, test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, the base one's $49. So it creates this beautiful scenario where your risk is limited. Most day traders lose. And most day traders that try this are going to lose as well because most day traders simply lose. It doesn't matter where they go, what platform they use, who they trade with. Most day traders are about to lose, right? It's a lot cheaper to lose on Top Step in general than it is to fund 5K and lose that. And so this is the best way to do it. It's kind of like a souped up demo account, real-time data, all kind of good stuff. If you want to check it out, they're an affiliate of mine. They pay me money. I'm biased, of course, top 3 most biased trader of all time in the world. I do trade off stream. You're not going to see in my trades. I don't even claim to be a good trader. But if you want to check them out, there's the link. I appreciate the love. Thanks so much. There's a link in chat right now. NVIDIA $180 before earnings. Maybe, brother. We'll see. Yeah, I just got to get more comfortable with taking longer trades, but yeah. But yeah, this strategy is the one that we're going to be looking to attack the most. You just have to be patient with it, in all honesty. You really got to have patience with it, in all honesty. Here, sorry for the music, man. This music's a little bit much, huh? And again, we're going to scale up some size and trade with some size today in our accounts. We'll see how that goes. I'll probably work on maybe trading the E-mini some too. Because I think the E-mini, a little bit smaller range, a little bit safer. But all right, guys. Still getting that downward pressure that we predicted. All right. All right, guys. So we're, we got the liquidity grab here. Some signs of liquidity grabs, guys, are up wicks. So if you want to see some up wicks, those are definitely signs of some liquidity grabs. We're looking at GameStop. We're looking at a couple different things here, but we'll mark your words. Yeah, I'm gonna try to trade larger today, and so that's what we're gonna do. We're gonna try to trade larger. Yeah, I'm looking at the newest news here. Bitcoin, the newest news. That should be a channel name. Newest news. Bitcoin, 86,000 roughly 86K. Man, we called this trend though, did we not? We told you guys we'd look for a high break, liquidity grab, downward trend. Maybe it continues up afterwards, but absolutely right. Where's GameStop at? Yeah, Bitcoin hit almost 91K this morning. Do your thing, John, and get rich. Well, we'll try, or we'll get broke. But either way, to be honest, I make money no matter what, right? I'm the only person that's probably going to be honest with you guys about this. I make money regardless. I could have a big losing day. I'm still making money, so it doesn't matter. But I'm going to try to win in trading. We'll see. $70K. Do you guys remember the guy Garrett Soloway? He shorted Bitcoin at like 30,000 or something, like 35K, something crazy like that. Yeah, CPI inflation data tomorrow as well, chat. Be ready. All right, guys, you guys ready? All right, we're gonna go ahead and close this stream down and start our other stream. And so stick around, guys. Let me make sure we got everything all tight and ready here. Again, it's gonna redirect you. So if it doesn't bring you to the day trading stream for whatever reason, you can go to this link right here, and it'll bring you to the day trading stream if you want to join the wait list. This is the stream where we're going to be scaling up day trading at the opening bell. Our downward pressure absolutely worked today. So absolutely worked. And yeah, I'll see you guys over at the new stream. Try to set this up. Yeah. So we can see you. Okay. All right, cool. All right, let's do this. We got monetization going. We got redirect working. Okay, cool. We're ready. All right, guys. I'll see you guys over there.